I'm seriously questioning the wisdom of investing in Novaland right now. The Vietnamese real estate market is facing a lot of uncertainty, especially with tightening credit conditions and rising interest rates. Novaland has taken on significant debt to fuel their expansion, and if the market cools down further, they could find themselves in a precarious situation.
Debt is a concern, but you're overlooking the fundamentals. Novaland has established itself as one of the leading real estate developers in Vietnam, with a diversified portfolio across residential, commercial, and hospitality sectors. The demand for housing in Vietnam, particularly in urban areas like Ho Chi Minh City and Hanoi, remains strong due to rapid urbanization and population growth. They're well positioned to benefit from these trends.
That's assuming the demand remains strong, but what if it doesn't? The government has been tightening regulations on property speculation to curb inflation and prevent a bubble. If these measures succeed in cooling the market, Novaland could see a significant drop in sales, especially for their high-end projects. Their exposure to the luxury segment could backfire if buyers start holding back.
Regulatory tightening is a factor, but it's not all bad news. The government's efforts to stabilize the market could actually benefit established players like Novaland in the long run by reducing competition from smaller, less capitalized developers. Plus, Novaland has been shifting its focus toward more affordable housing projects, which could help them tap into a broader market segment and mitigate the risks associated with the luxury sector.
Shifting to affordable housing is easier said than done. Novaland's brand has been built on delivering high-end, premium developments. Moving down market might dilute their brand and profit margins. Additionally, the affordable housing sector is highly competitive, with lower margins and more challenges in terms of land acquisition and regulatory approvals. It's not clear that they can transition smoothly or profitably.
It's true that affordable housing has its challenges, but Novaland has the experience and resources to navigate these. They've successfully delivered numerous projects over the years and have a solid track record of overcoming regulatory hurdles. Moreover, their relationships with local governments and financial institutions give them an edge in securing prime locations and favorable financing. This could allow them to maintain profitability even as they diversify their product offerings.
Track record and relationships are important, but they're not a guarantee of future success. The Vietnamese real estate market is notoriously volatile, and Novaland's high leverage makes them particularly vulnerable to market downturns. Their ability to service their debt relies heavily on continued strong sales, but if market sentiment shifts or if interest rates rise further, they could find themselves in a liquidity crunch. That's a big risk for any investor to take on.
Risk is inherent in any investment, but so is opportunity. Novaland's high leverage is a concern, but it's also a reflection of their aggressive growth strategy. They're not just sitting on their hands, they're actively acquiring new land and launching new projects to capitalize on market demand. If the market continues to grow, those investments will pay off handsomely. And let's not forget, Vietnam's economy is still expanding, and there's strong government support for infrastructure development, which bodes well for the real estate sector.
You're putting a lot of faith in macroeconomic trends that are far from guaranteed. Yes, the economy is growing, but it's also exposed to global risks, like a potential slowdown in China or rising global interest rates, which could spill over into Vietnam. Novaland's heavy reliance on domestic demand makes them vulnerable to these external shocks. If there's a downturn, their high debt load could quickly become unsustainable.
External risks are always a factor, but Novaland has shown resilience in the past. They've weathered economic downturns before and emerged stronger, thanks in part to their diversified portfolio. They're not just relying on residential sales, they've also invested in commercial properties, hospitality, and tourism projects, which provide additional revenue streams and help cushion against market fluctuations. This diversification is a key strength that could help them navigate any potential headwinds.
Diversification helps, but only to a point. The commercial and hospitality sectors have their own risks, especially in a post-pandemic world where consumer behavior is still shifting. For instance, the tourism sector in Vietnam is still recovering, and any future outbreaks or global economic shocks could hit those revenues hard. Plus, commercial real estate is facing challenges with the rise of remote work and changing office space needs. Novaland might be spreading themselves too thin by trying to do it all.
It's a balancing act, but Novaland seems to be managing it well. They've been proactive in adjusting their strategies, such as focusing on mixed-use developments that combine residential, commercial, and leisure facilities. This integrated approach not only meets the evolving needs of consumers, but also maximizes the value of their developments. Moreover, the recovery of tourism in Vietnam is expected to gain momentum, especially with increasing foreign investment and government initiatives to boost the sector.
Mixed-use developments are appealing, but they also come with higher complexity and execution risk. These projects require significant upfront investment, longer development timelines, and more coordination across different sectors. Any delays or cost overruns could strain Novaland's finances further, especially if they're already operating on thin margins due to their debt load. It's a high-risk, high-reward strategy, and I'm not convinced the upside justifies the potential downsides.
High risk often leads to high rewards, and that's the nature of real estate development. Novaland's ability to deliver complex projects is one of their core competencies. They've been able to consistently deliver on time and within budget, which gives me confidence in their ability to manage these risks. Additionally, their strong sales performance in recent years suggests that there's robust demand for their mixed-use projects, even in a competitive market.
Past performance is no guarantee of future results. The landscape is changing, and Novaland is facing a lot of challenges that could impact their ability to replicate past successes. Their high debt levels, exposure to market fluctuations, and the risks associated with their expansion strategy all make this a much riskier investment than you seem to acknowledge. There's potential, sure, but there's also a very real possibility that things could go wrong quickly, leaving investors with significant losses.
That's true, but with high risk comes the potential for high returns. Novaland is a leader in a market with strong long-term growth prospects. The Vietnamese real estate sector is still developing, and as one of the top players, Novaland is in a prime position to benefit from the country's ongoing urbanization and economic expansion. If they can navigate the short-term risks, the long-term payoff could be substantial. It's a calculated risk, and one that I think is worth taking.
I'm not convinced. The risks, in my view, outweigh the potential rewards at this point. I'd rather wait and see how they handle the next year or two, particularly with regard to their debt management and market positioning. There are too many uncertainties right now, and I prefer to invest in something with a more predictable risk-return profile.
Waiting might make you miss out on a significant opportunity. Real estate investments are often about timing, and getting in early before the market fully realizes the potential can lead to outsized returns. Novaland has challenges, but they also have the experience, resources, and strategic vision to overcome them. I believe they're worth the risk, and that their growth trajectory, particularly in the context of Vietnam's broader economic story, is compelling.
That's where we differ. I'm all for strategic investments, but I'm not willing to bet on something with as many red flags as Novaland. It's an intriguing opportunity, I'll give you that. But for now, I'm staying on the sidelines until I see clearer signs that they can handle the pressures they're facing.
Fair enough. We'll see how it plays out. I'm confident Novaland will prove to be a strong performer in the long run, but only time will tell. Let's keep an eye on them and revisit this discussion as the situation develops.